and get back to the markets. Unmesh Sharma of HDFC Securities is now with us on the show now. Thank you very much, Unmesh, for joining in. Wanted to get your thoughts in on, banks first. Bajaj Finance, for instance. The Q1 updates look very good, but the stock is sulking today. It's down 1.5%. And on HDFC Bank too, we had a 3-4 day kind of rally, but it's fizzled out. Do you think that's it now, momentarily, at least in the near term? What have you made of the kind of price action post the news?
Yeah, so look, HDFC Bank is my parent bank, so I can't talk much about it. Stock-specific discussions, a little bit of compliance issues around that. But what I can tell is the fact that I think the key items which are being watched out by the market on the large financials is one is that there is definitely a valuation gap which is there, which makes them quite compelling. At the same point in time, what's happening is that this larger theme is playing out, which is that there is really price discovery happening only in the large caps because the FPIs can actually sell and leave the market, right? So while on the small and mid cap, I think there is a lot of domestic participation with that liquidity trapped within India. So that's the other thing. And then within that, there are individual factors which are technical. For example, foreign ownership, as a result of which there is speculation on whether something gets included in indices, global indices or not. So if you leave all that out, so technical matters out, fundamentally, I think people are looking at one, growth. The second is, and this is speaking from 2 or 3 cumulatively together, including Bajaj Finances, what is the quality of that growth? Because how much of it is coming from cross-sell to existing credit people whom they've given loans to, and how much of it is new. On top of that is the mix, because there is definitely concern that there could be, if there is any credit event, then that is likely to be at the unsecured end. So if you put all this together at this point in time, I think what's happened is that apart from the technical factors of inclusion in indices and whatnot, I think, and what FPIs are doing, I think the general point is to look out for the, what is the trend in cost of funds and actually where the growth is coming from and what is the quality of that growth.
Okay, so let's expand on that, Unmesh. Hi, good to have you on the show as always. I guess the technical factor is just one part of it, right? And that'll play out.
Yeah.
But the bigger issue is that will earnings finally start firing up? Are most of the merger shenanigans behind us now? And let me expand the question. I mean, not just HDFC Bank, and we're running into the next quarter numbers as well. Where do you expect pleasant surprises when it comes to banking?
Look, I think at this moment in time, while there are some concerns about what's happening on the credit cycle on the unsecured side, as well as, if you look out, if you look at the growth in some of the NBFCs as well as the small banks, there is this concern which has started to come about. But what's happening is that if you look at the commentary which we are expecting from this quarter, see, backward looking numbers not going to impact that much because a lot of operating updates are out there. Plus, the financial companies are also very, very well understood as far as the data is concerned. I think what will happen is that the market is not going to, given the flows in the market, it's not going to react till the bad news actually hits. And what I mean to say by that is that at this point in time, while it's good to keep a close eye on the credit cycle, I think what will happen is that the high quality banks which have what I would say is the outside the top tier of the banks as well as the NBFCs will not report any of these numbers and will not be reporting those to come in the next one or two quarters. As a result of which we expect that there should be some buoyancy as far as the market chasing growth is concerned. So, if you look at banks like Federal Bank, for example, which is there in our model portfolio, or some of these, maybe a little bit of the rural theme playing out, or the housing finance names coming through. I think that's what we are expecting to see in this.
Has IT bottomed out, at least in terms of earnings? Do you think this quarter marks the end of any kind of earnings downgrades and things only pick up? And what's your own expectation Are we likely to see some pickup in growth in the second half of the year, or realistically, it's an FY26 growth story?
Yeah, so the answer to all three questions is a resounding yes. Our analysts Apuv and Amit have written a note which came out last night where they are talking about this. Now, honestly, I'm slightly old school, so I was quite skeptical and kind of questioning whether, this is going to, whether this is actually going to happen. What we are saying in the note is that if you look at amongst the large caps, for example, TCS, and amongst the mid caps, Persistent, for example, which are our top picks in the note as well, what we are saying is three things, and all three of them are positive. One is the fact that the market is now trying to discount stories even if they are 1 or 2 quarters out. So, while yes, we will see the turnaround happen in the second half of the year, maybe even in the fourth quarter, what will start happening is that the market will start discounting that, and to some extent that discounting has started. Within that, some will move faster than others, and clearly in a cycle of upgrade on earnings, you always see the upgrade as a percentage, and hence the impact being larger on the tier 2 names as compared to the tier 1's names. So, and that's how they are positioning as well. And I think that the answer is that Street is moving in the direction of assuming that what happened last quarter, which is the fourth quarter of last financial year, and what will happen in this first quarter will basically mark the end of the downgrade cycle, as a result of which, earnings multiples have started to move up, but we expect that this theme could continue through the rest of the year.
Okay, all right, got it. Unmesh, we'll have to leave it on that note for today, out of time, but we look forward to a longer chat next time around. Thanks for joining in. That's a view from HDFC Securities coming through. We do have to take a very quick break. On that note, we'll come back with more on the markets.